Hi guys, welcome back to the channel and this crazy challenge we find ourselves in. Well, today I want to be more specific in talking about something rather than just talking about the market and how I can break it down for you and how you can take advantage of that market. Now, I'll be talking about today the moving average. What's the difference between 100 moving average and 20 moving average? I'll then define my edge for you to see how I exit and enter a trade when I take profit and close loss. And also I will talk about the relationship within the markets and how you can also approach the markets. Now let's go to the chart and see what we've got for today. I'll just open up here the live trading session and then excellent. Right now, so what I want to talk about first is let's have a little breakdown of the market and then see how that has been played today. Obviously, crude oil has massive sell-off, which I've missed out on, unfortunately. I did enter right here, but then I kind of got stopped right around this point before the major sell-off continued. Unfortunately, missed out on that opportunity, but I'm moving forward and I've taken a £69 loss, the wrong number, of course. Right now, let's break down crude oil quickly and see what is the daily. Now, if you look at the daily candles, then you see that we continue at that little sell-off we've had throughout this and also last week, although a whole of November, to be fair with you, going into October as well. However, we're currently sitting at some sort of a support area, to be fair with you. And if you look at closely, we're currently testing that support. So monitor closely when it comes to a crude oil at the moment, whether or not we'll bounce off that and continue a uptrending from there, or we'll break below that and continue the downtrend momentum we had from October. We're yet to find out, but yes, keep monitoring crude oil closely, because after this huge sell-off right here an hour or two ago, then obviously we're sitting at that support level. So yeah, just be mindful of that. Now let's talk about natural gas, and then we'll move into the moving averages, and I'll show you what is the difference between the 20 moving average and 100 moving average, and also how you can take advantage of that yourself. Now, when it comes to natural gas at the moment, if you look at the daily, again, we're currently sitting at below the MA to start with, the 100 MA as a good indicator on the dailies. And then also it's kind of a support area right here on this ascending pattern as it stands at the moment. So let me just draw a guideline here. I just grab a segment and then have a little guideline. So potentially we're looking at some support levels right here, but we may as well break below that and continue downtrending, because we are currently below the 100 MA on natural gas, and it's more or less a consolidation zone that stands at the moment. As you can see, we have some upper momentum at the moment, breaking above the MA and continue that momentum, but that may as well change, testing potentially the 100 MA on the way up as a new resistance level. But yes, that's on natural gas for today. It's more consolidation with natural gas, so I don't expect too much, potentially bouncing off that major support I've just drawn right here, but yet to find out. I haven't opened a natural gas position as of yet, but I'll be keep monitoring natural gas. It's 2%, almost 2% up, which is quite good for the day. But let's see if we continue that upward momentum. Now back to crude oil. As you can see, building of that support, 72.5, another round number I always advocate, and that is a pure, really a good profit call or stop loss as well. It depends how you trade. Now let's go into a more of the content of what I was talking about. I'll break down to you the difference between 100 MA and also the difference between the 20 MA or moving average. Now, as we speak, natural gas just broke the 2% daily, so that is a great little trade right here, to be perfectly honest. But hey ho, it's against the major trend, and that is a downward momentum. So I'll be restraining myself at the moment with natural gas, to be fair with you, when it comes to a long trade. Now back to crude oil. Now I want to show you what is the difference between the 20 MA and the 100 MA. Now I'll get, I've got the 100 MA at the moment here, so let me get the 20 moving average right here, and then I'll pop this one in green so it's easily recognizable. Then you can see now the difference. First of all, it's the room between the swing and the indicator to start with. Now if I am to trade with 100 MA, then I'll have a little bit a longer confirmation, as you can see, and also at the same time I will indeed have a larger loss on that indicator. It's purely because on the minute chart, as you can see, when it breaks below that, if obviously the trade it doesn't go your way, then it's a long way to wait for your stop loss to be activated, like I did in this particular instance earlier right here. Now if I was to trade only with the 20 moving average, which will allows me first of all to enter more cleanly here to start with, and then secondly will make shorter my stop loss, yes, so to speak, or make less loss on my trade, because it is a closer indicator to the swing. It's 20 moving average, not 100-day moving average, so that's what the difference is. And it is a big difference, to be fair, when it comes down to confirmations and also breaking above that as being your stop loss, for example, because like I showed you with the 100 MA, just simply in a scenario, let me pop down a quick scenario right here. So you got the swing, you got the 100 MA, which we just broke above that. So again, a good indication, but it's a downtrend at the moment, is the major trend, so I'm not really looking for a long position. Anyway, back to the moving average. Now if I was to let's say open up position right here like I did, yeah, very unlucky where I did it myself, to be fair, but yes, so I'll just use some more instruments. I can circle out a few bits and pieces for you. Right, so you got the break right here on the 100 moving average, right? So happened here, obviously we traded down a little bit, we met some support right here, and then we had a big spike to the MA, and then we traded above the MA before we reversed back and then continued the down selling. However, that is with the 100 MA. Now because of what I did, now if I am to sell at 73.73, let's go there, 73.73, 73.73, okay, right here where I've opened my trade was, to be precise, 73.67 after my confirmation right here, first candle below the MA confirmation, and then we continue slight down sell, and we then met some support, as you can see along the way right here at 73.60 per barrel. We then had the spike testing the 100 MA as now a resistance, and then we break above that. I close my trade, £69 loss, and then we break below that. I should have taken that edge, but I have a golden rule: don't trade 10 minutes after my close trade. So it's very simple, it's easy to follow those rules, so I'm sticking to those rules. And then since we didn't have the 10 minutes, I've missed out on it. A bit stupid, yes, but I'll still follow that rule, because 9 out of 10 you'll miss out on consolidation zones, and then after 10 minutes you may potentially be able to re-enter a good trade. However, back to here, and then as you can see, I've just got stopped out right over here. I'll just get that in red. I got stopped out right here above the MA. Right, so that generated a loss at £69. Nothing too much, nothing to worry about. However, if I was trading with the 20 moving average, now first of all, I wouldn't be entering right here, because that is now too late for the 20 moving average. And as you can see, now I would have entered, let me get that in green, I would have entered right here, which it doesn't seem like a lot, to be fair, but when you move that up And then if I have, then we find that support level right here, and then I exit the trade above the MA as again another signal to exit my trade. Then that would have potentially giving me a good new 0.23%, or with my 10 times leverage, that is 2.3% profit daily, which is amazing. Again, it's short of my 4% target for my major goal, which stands 21,273,898. So that is the major goal. And I believe if I am to switch now from a 100 moving average to a 20 moving average, bringing the moving average closer to the swing, then I will potentially limit my loss potential and increase my profitability by just doubling my edges. As simple as that, I believe. And then again, if I was on to trade with the 20 moving average, I'll then close in profit here. I'll wait for my 5-10 minutes as a golden rule not to enter a trade, and then obviously I will re-enter right here below the 20 moving average, and I will be riding that really amazing train, right? So we met that support what I was talking about. We currently breaking above the 100 moving average. So with that being said, I believe I'll be moving forward with only the 20 moving average as the one to really be better. As you can see, even on this breakout right here, if I'm to include the 100 moving average in red, then you'll see that we are entering a little bit too late after the move when we should have really entered. It may be a little premature, but again, I believe that is just a better indication myself I'm going to be using for a trading going forward as 20 moving average. It just works better on a day-to-day basis, I believe, and that's what I have found. So that's what is going to be my edge, and now let me walk you through my edge as well, how I'm trading and how you can also potentially use that edge if you find it valuable for yourself. Now let me just get rid of the 100 moving average, makes it easier. Let me get out of any orders, move this one away. Excellent. Right, now let's talk about my edge and how I define my edge and how I can determine that when I can cut loss and when I can take profits, and what I'm talking about always about those round numbers, what they mean and how you can also take advantage of them. Right, first things first, let's see now with the new moving average of 20 moving average, obviously I'll have a little bit more edges than previously. Let me just try and see if I can move the average a little bit higher so I can avoid those consolidation zones. Let's see if that's gonna work. Faulty, not really. How about, no, I'll stick with the 20. I quite like that. Yeah, I'll stick with the 20. Right. So obviously we do have a major I would say it's a short squeeze because we oversold here. We broke above now the 20 moving average, and then we have upsell from there. Quite a strong, nice push. That is about 1% the last 5 minutes. A good push, really, to get onto. But again, like I said yesterday, for me at the moment, crude oil it's kind of a consolidation zone where it's finding itself into a horizontal pattern. Obviously we made a resistance of about 79.6 and the support stands to about 72.5 at the moment on the daily. So be mindful, probably a support and resistance would be a preferred choice of trading when it comes to crude oil at the moment, where natural gas looks like we found some support and we're moving forward from there, although we are still currently trading below the 100 MA on the daily, so just be mindful of that. Now let's talk about my edge and how I'm taking my edge, how you can also profit from that edge, and what I have learned throughout the years of trading, and how obviously I want to pass that information to you. If you found valuable, implement it on your daily trading. If you haven't, discard it and move forward from there. But hey ho, let's show you now what my edge looks like. Well, I'm trading based on two major indicators. third one, it's obviously volume underlying, and that is just showing what's the volume into the current market at the moment. However, now I'm focusing on RSI, and also I'm focusing on the moving average. As you already know, I've just changed that to 20 moving average, so I'll have naturally more edges within a one trading day compared to the 100 moving average, because it is a little bit further away from the swing itself. Now, one edge, obviously, it's here. As you can see, the indicator is the RSI. It is oversold based on the RSI. So then we found some support. We broke above the 20 MA. Now that is my edge. The edge is the moving average for myself. I found to be a very proven edge, day in and day out. If you stick to it, obviously it can be very profitable if you don't divert from your rules, and you have to really have a set trading rules, so you don't really break those whilst you're trading, and then you can don't violate your rules, right? Simple as that. Now let's stick to my edge, and then I'll talk about now. Let's say we don't know what's going to happen here, because obviously the market is just kind of pushing up after meeting some support right here. Now, when we have closed one candle above the moving average, that is my signal to enter a trade. Now, I used to have it as 3 candles, but then sometimes you find that the market gaps up so much from the moving average that diminishes any good entry for myself. So I kind of cut that to only 1 candle at the moment, and have found that to be also quite profitable, because if I enter right here on 1 candle confirmation, that will take me to a, let's say, 72.5. Now if I'm to enter at 72.5 right here somewhere, let's say candle closed, open right here, opening a position. Now if I am to set a stop loss somewhere, now I'm close to the moving average, and that is by nature becoming now the new support, because it used to be a old resistance. As you can see, now becomes a new support. Now I'm in fact in a good position to enter a trade and then have my stop loss wide open, more wider than normal, because if I was waiting for a 3 candle confirmation like I used to do, then I'll probably enter right here, and then the gap between the open and my stop loss will be quite more significant than what it is now. 1, 2, 3, I would have opened right somewhere here. Obviously that is a new 0.1%, which is ridiculous. So it is kind of, no, that's from where it is, but it's new 0.5%, which is still ridiculous, obviously. So I don't really want to do that, kill myself trying to make some money, and then losing more than I can make. So that's why it is good, in fact, to be able to open closer to the moving average. Since we're breaking above that, we already have the confirmation of 1 candle above the moving average. Obviously, if the edge doesn't work, it doesn't work, but you're not gonna pay as much to find out as if you, for example, wait for 3 candles confirmation above the moving average, because then you gap up so much between the stop loss and your entry point, so it diminishes any opportunities to make money on a consistent basis, really. So you have to really monitor that when it comes to entering a trade. Now where I'm gonna exit that trade, now let's say I'll open right here, which I missed out on. Obviously would have been good to enter this trade, but because it's not in the favor of the major trend, although we can now argue that the major trend is a consolidation horizontal pattern. So yes, it does make sense to enter right there, purely based on that criteria, that now we're finding ourselves in fact a horizontal pattern with crude oil. As you can see, testing that support, we may bounce above that, and then uptrend, testing some resistance at 79.5, for example. Now, since we opened a trade right here, we waited for our 1 candle confirmation, we have set a stop loss right somewhere here. Now I set my stop loss right here. It's purely because when the trade will go down, we may find some support here or here. So I don't want to be too close to the 20 moving average. I want to be in for the stop loss to be breaking the current pattern, or that is the upsending pattern, and that's what I'm looking for. Obviously, if we have another confirmation of a candle below the MA, then I'll be looking to close that trade anyway. The stop loss is pretty much there for any too volatile moves on the market, so I'm in full control of my trade, for example. Now, since we opened the trade right here, 72.48, where we broke above the MA, we have that confirmation right here. Then where we should take our profit is the big question, right? Of course. Now, that's why I always like to advocate on those round numbers, as they're being very valuable to me when it comes to determining a profit call and a stop loss, also like a support or resistance levels. Now, if I am to enter this trade, I'll be closing it right here as a round number. We do have some previous resistance, so it only will make sense to be closed at the round number, and I'm not going to squeeze every penny of that trade. Of course, I'll be always leaving some room for some errors, let's put it that way, because I don't know if exactly we'll hit that round number, we'll break above it, or we'll just touch the, let's say, 72.95 for example, and then reverse sharply from there. So we don't really know what will happen, and I don't want to squeeze every potential penny out of that trade. I'm only looking for that new 0.4% profit. And as you can see here, if I close a profit right here at 72.95, that gives me a new 0.65% profit, or with my 10 times leverage, that is 6.5% daily profit. It is ridiculous, this strategy, guys. It is, I'm honest with you, and it's so easy to follow it. So that is my edge. That's how I'm entering a trade. That's how I'm closing in loss, and that's how I'm also taking my profits. Now, if you also don't believe, let's say, that the market will in fact go and hit your profit call, then what you can do is, along the way, you can take 1/3 of your positions, so you can continue being a profitable. So let's say the market moved sharply in my direction, I found myself in a good profit, I'll take 1/3 of my position right here. Let me get that right. So we got nice 1, 2, 3, 4 candles. I'll take 1/3 right here. Then I'll take another third of my position right here at my predetermined profit call. And then after that, I will move my original entry point, my stop loss, to my original entry point, because that will give me a stress-free trade. So even if the market then continues uptrending, I'll still have 1/3 of my position left, and then I can decide where I can take that. For example, at the height of the day, if we continue uptrending, or even if we reverse like we did here sharply, obviously I'll be looking at no loss and only 2 profitable trades I already taken in the same kind of time. So that's how I offload 1/3 of my position, so I can maintain that winning attitude going forward. But I focus more on round numbers, as they've been really good when it comes to profit calls and also support and resistance levels within the market. As you can see here, we did try to find some support at $73 per barrel. We didn't. We're breaking sharply now. So let's open a little position right here. Okay. And then we'll have our profit call. Okay. We'll have our profit call at, no, that's stop loss. Profit call is at 53. And then our stop loss is right here. Okay, let's see how that's gonna go. See if we can hit that. Obviously I got the signal. We're trading below the 20 moving average, and it's only making sense to enter that trade. Let's see if that's gonna work. Obviously we just broke that support of the round number as well, so by all means we should be hitting our profit call along the way. Let's find out. £35 up. Okay, that's new point 14, 50 quid up. £61. Let's see. To find some sort of support right here at the moment, but we're quite sharply downturning at the moment and continue the major trend of the day, the sell off. So let's see if we gonna test that support right here at 72.5. We will find some support right here. We're currently testing some small supports right here along the way, but I think we got quite a lot of volatility. We overbought right here, so I'm certain that we'll go and hit that profit call right here. But let's see. I mean, that is the market. We'll never know what exactly will happen, but we are 2.7% up with the leverage at the moment, so that is quite good. Okay, we got 3.3. Okay, I'll be closing out right here. It's 3% up. So yeah, that is good. So that's how it is, to be fair. And I believe now changing to the 20 moving average will definitely help me more along the way. It's purely because now I don't have that huge risk of at the 100 moving average. The swing is just too wide from, I mean, the gap between the swing itself. Yeah, we just hit that profit call, by the way, but it was too early. But hey ho, I still make some 3%, which is fantastic. And then now, like I said, I'll be focusing on the 100 moving average rather than, no, sorry, on the 20 moving average rather than on the 100 moving average as my main strategy at the moment. Now, I want to talk to you about also a little bit touch base with, I was going to talk about the relationship with the markets. Yes, that was a good thing to say, because when you go and trade, you don't really want to be in adverse relationship with the market, because that is something you should avoid, honestly with you, because you want to be in the flow of the market. You don't want to hate the market. You don't want to really fear the market is the last thing you want to do, because if you fear something, that certainly will happen, and if you fear losing money, that certainly will happen too. So make sure you always take on those edges. Just be in the flow of the market. Be happy when you see the market, because it gives you opportunities to make as much money as you can possibly imagine. Yes, it also takes the opportunity to lose as much as you can imagine, but hey ho, that's one of them things. I can see crude oil is bouncing off the 72.5 support. I hope you guys taking advantage of that trade. I can see a few of you are watching at the moment. I'm happy I've taken a live trade, and I'll be more able to take those live trades now since I moved my moving average to 20 compared to the 100 moving average, which was quite a lot of gaps between my trades, and hence why I wasn't able to take as many live trades as I potentially should have. I think I'm gonna wrap it up for today. It's been a fantastic trading day. I really enjoyed explaining the difference between the moving averages, the 100 and the 20, how I'm gonna go about trading with the 20 moving average, what my edge is, and what the relationship between yourself and the market should be going forward and trading flawlessly when it comes to your opportunities. Thank you so much for watching today. I hope you have a fantastic trading day. Make sure to remember one thing: take advantage of each and every edge you see on the market. I'm here tomorrow, same place, same tickers, natural gas, crude oil. I'm looking forward to see you tomorrow. Thank you.